Hey guys, welcome back to the channel. Hope you're all doing well. Firstly, I just want to thank everyone for all the support they've been showing recently. The channel's recently hit 100 subscribers and we've also got our first video with over 1,000 views. So it's really great to see this community growing, and yeah, I just want to say thank you for all the support that you guys have been showing. So in today's video, I'm going to be taking you through a topic that's come up quite a lot recently within the Discord server. We've had a lot of members requesting a video around this topic, and it's actually something that I used to struggle with myself quite a lot when I first started learning more about SMC concepts and specifically market structure in general. And so in today's video, I'm going to be going through the different types of market structure that we can find. I'll be explaining the differences between swing structure, internal structure, and also substructure. And I'll be, showing you an example of how you can use these structures together to find some really high probability trade setups, and also keep in mind, that larger swing of the market, always understanding what price is showing us. Always a quick reminder before we jump into the video, guys, make sure you leave a like and subscribe to the channel if you enjoy what you see in the video, and of course make sure you're following the Instagram and check out the Discord server to meet lots of other like-minded traders. Again, as I always say, it's great to see the Discord server growing at the moment. We're having lots of new members coming in every day, really nice discussions going on, lots of setups being shared, lots of people sharing their analysis, sharing their results, and it's just great to see everyone, benefiting from everyone else's input. So yeah, let's jump straight into the video, guys. So guys, before we go through the different types of market structure that you can find, I thought it was sort of imperative that we go over basic market structure in its simplest form, because without understanding the fundamentals, you're really going to struggle to identify the different types of market structure that we can find within the live markets. And if you've watched my previous video on my favorite SMC entry confirmation, I have pretty much gone over this, and I do go over it in a bit more detail in the previous video. So if you do want some more details on basic market structure and how to identify market structure, etc., be sure to go check out that video. But for the sake of this video, we're just going to run over it very quickly. I'll be touching on what makes a bullish market and what makes a bearish market. And these are obviously the two types of markets we can find ourselves in. We obviously have a ranging market as well, where we can be, obviously ranging between two different points. But for the sake of a trending market, we've got our bullish market and our bearish market. And our bullish market is an uptrend, and the bearish market is obviously a downtrend. And we'll start with the bullish market on the left here, as you can see. And this will always start with a sort of strong bullish move to the upside. After we've had a strong move to the upside, we're always expecting a retracement. And once we've had that retracement, we can mark out our higher high, which will be the highest point of that sort of bullish swing leg that we've just had. And when we have this retracement, I haven't actually drawn out any demand zones or anything, because we're purely just focusing on market structure for the moment. But when we have this retracement, we're expecting price to retrace to a certain point of demand where price will ideally react from. We'll get a strong reaction, which will give us that bullish break of structure, as we can see here. And once we've had that break of structure, we can then confirm our higher low. And this will obviously be the lowest point of that retracement we've just had. And this is sort of the foundations of a bullish market, a series of higher highs and higher lows. And as you can see, after we've had this break of structure, as always, we are expecting a retracement. And once that retracement starts, we can then mark out our new higher high. And obviously, we are expecting price to continue this bullish order flow. And for this to happen, price must react from some sort of level of demand within this previous leg that we've had. And when we see this reaction, price is likely to continue up, make another break of structure. And once we've had that break of structure, we can, of course, mark out our new higher low. So as I said, a bullish market is just simply a series of higher highs and higher lows with bullish breaks of structure. Obviously, involved in this, we have our demand zone mitigations, but we're not getting into too much detail in that at the moment. We're just purely, focusing purely on market structure, which is this series of higher highs and higher lows, as I just said. And, same as before, we've had this break of structure here. We're anticipating a pullback after a break of structure, and we can then mark out our new higher high and anticipate price to react from some sort of level of demand, and this bullish order flow will likely continue. And now for a bearish market, it's very similar, just the flip side. We're obviously going to start with a strong bearish move to the downside. And after this bearish move, we're obviously expecting a retracement. And when we have that retracement, we can then mark out our lower low, which is the lowest point of that swing leg that we've just had. And obviously in a bearish market, we're anticipating that price is going to react from some sort of level of supply within this leg. And when price reacts from this level of supply, we're anticipating that price is going to make a strong bearish move, give us that bearish break of structure. And once we've had that break of structure, we can then mark out our lower high, which will be the highest point of that retracement we've just had. And, it's very simple. Same process follows. We are expecting a retracement after a break of structure. When we have that retracement, we can mark out our lower low, which is the lowest point of that next leg we've just had. And then obviously we're expecting price to react from some sort of level of supply, give us a strong reaction, give us that next bearish break of structure. And once we've had that break of structure, we can then mark out our new lower high. And this will continue as we continue to have a series of lower lows and lower highs, obviously with supply zone mitigations involved, but we're not getting into too much detail about that. This is just the sort of simplest, most basic sort of market structure, as you can see from the title, just basic market structure, but, fundamental to understand the differences between swing structure, internal structure, and substructure, which is what we will get into just now. So this is where I'm going to teach you guys my way of sort of mechanical market structure. And the reason I call it mechanical market structure is because you're trying to reduce as much discretion from your trading as possible. You want it to be as mechanical as possible, so you're never having to sort of second guess yourself. You're never hesitating. You always know when you're in the market, what sort of structure you're looking at, what sort of trade entries you want to be looking at. And yeah, this way you always know what you're expecting from the market and what you're waiting for price to do to be able to look for those entries that you are anticipating price may form. So for I'm going to combine here swing structure, internal structure, and substructure, and I'm going to be showing you the different ways you can possibly trade them. I'm not going to go into detail about trade entries or anything like that. I'm simply going to show you what they can be used for in the live market and how useful they are to be able to form trade ideas about. So obviously for this example, we're going to start with a swing structure move. And this example is going to be a bullish example. So we've obviously got a strong bullish move, which is denoted by this black line here. And this is going to be our swing move. And what sometimes happens in the real market, obviously you're never just going to have one strong push to the upside with no pullbacks in between. And what you'll often see is a very small pullback like this. But this may not be large enough for you to consider a swing pullback. As you can see, we've got this huge swing move. Price has only pulled back a very small amount, hasn't come anywhere near our discount prices or anything like that. And so what I like to do here is I like to class this as internal structure. The reason this isn't swing structure for me is because it's not a large enough pullback in relation to this swing leg that we have here. So this is just an internal structure forming for me. And I would mark out my internal high here. And obviously I would expect, this internal structure to continue bullish. Obviously we could have our swing pullback start from here, but quite often what we'll see is we'll see that internal structure continue slightly. We'll have that internal break of structure, which will give us our internal high and our internal low. What we can then see is that we have our swing move, which is this entire black range, and this isn't including this pullback. It is including the pullback in the sense that our entire swing move is all the way from the bottom down here, all the way to the top up here. This pullback here is only internal structure. It's not large enough to be considered swing structure. So this entire move is all part of our swing move, and we have a bit of internal structure forming within that swing move. And obviously, as I've said before, when we have a swing structure, swing break of structure, let's say price is broken structure somewhere down here, we are anticipating a pullback. And one of the first signs we can have that a pullback is starting, and a sign that I always look for in the live markets and I really like to take trades from, is where our internal structure will flip bearish. And this is a break of the expected order flow. And the reason this is a break of the expected order flow is we're obviously expecting this bullish market to continue, which would be that series of higher highs and higher lows, higher highs, and we'll obviously expect price to make a higher low here and continue. But what we often see when we're anticipating that pullback is this internal structure, which, as you can see, is now this blue line here, because we are now playing within our swing point, and our swing point is obviously this high up here, so this is our internal break of structure. Our swing high can be marked out here with this larger circle, as you can see. So this would be our swing high. Our swing low would be all the way down here. And as you can see, our internal structure has just made an internal break of structure here. And obviously this is also a change of character, if you like to call it that as well, because we have that break of expected order flow. The nature of the market is now shifted from bullish to bearish. This higher low, which should have been strong if the internal is going to continue bullish, has now failed. Price has broken through it. And same process applies. So we are now beginning to form a bearish internal structure, bearish internal market. And what we expect or anticipate after a break of structure is a pullback. And when we have a pullback, we can obviously mark out our new lower low. And obviously this is just an internal lower low. It is not a swing lower low. We are still within our swing points. So our swing high up here, our swing low all the way down here. And this is just internal structure forming now. And this is actually one of my favorite entries to get involved in. When we have that swing break of structure, we're anticipating a pullback. And one of the first signs we have is that change of character or internal break of structure. And we can then wait for price to retrace back into some sort of levels of supply. Obviously, I'm not marking them out at the moment because I'm just focusing on market structure purely. But yeah, this is a really good entry to be able to take. If price retraces back into the supply, we can anticipate that price may react from here, and this internal structure is going to continue bearish to facilitate that swing pullback that we're expecting. So obviously in this example, price does react from some sort of level of supply. We get our next internal break of structure, and we can then mark out our lower high, and our internal structure is now completely confirmed as bearish because we have these series of lower lows, lower highs, and we have another lower low forming here. Obviously have to wait for that pullback to be able to mark out our new lower low. But this is where we can then start to play internal structure within our swing structure. So obviously we always want to be trading pro trend, and at the moment our trend is bullish, but as I said, we are expecting that pullback, and it is completely valid, and this is something I love to do in the live market, to trade this internal structure all the way down into our discount demand zones that we anticipate price may react from to continue our swing structure. But for the moment, whilst we're in premium prices, I'm more than happy to take sells from areas of supply, playing this internal structure. And this is, technically we are counter trend because the, overall trend is bullish. But if we're focusing on the internal trend, playing the pullback within this swing trend, this is no longer counter trend, this is pro trend. We are taking sells following this bearish market structure. As we can see, we've got a series of lower lows, lower highs, lower lows. Price is ideally going to form a lower high up here, so we can look for entries within some sort of level of supply perhaps, and hopefully price will make a strong reaction from there, give us another internal break of structure, and once we have that internal break of structure, we can mark out our new lower high. And this is where we can see our internal structure continuing its bearish order flow, and this can continue for some time. As you can see, this price is slowly coming back into our sort of discount demand zones. Obviously, I haven't, again, marked out any demand zones because I'm trying to keep this as clean as possible and focus on purely market structure. But as you can see, we will then get another internal break of structure, and that confirms our new lower high. And now when we do get into our discount prices, and especially once we come into our discount demand zones, I'm less likely to be looking for sells because they are becoming less high probability, but they're still valid, and I'm still more than happy to continue to play this internal structure until it fails. So until we have a break of one of these lower highs, I'm more than happy to continue looking for sells. Obviously, I understand that they are becoming less high probability the further we come into our discount prices, but I'm more than willing to take the risk, especially when the RR is very nice, especially if you're able to get some, M1 confirmation entries within these. Obviously, as I said, I'm not going too much into entries now, but let's just say this is a M15 swing, move to the upside. Our M15 internal has flipped bearish. If I'm able to take some M1 confirmation entries in here with, an RR of, like 15R to the internal low, I am more than happy to do that in the live market, because I know even if I take, a few losses here and there, the RR will always be in my favor, and I'll be able to take some really nice percentages. So as I said, we're now in our discount prices. I am expecting with our swing structure that price is going to react from some sort of level of demand within here, and this swing structure is going to continue. And for that to happen, obviously our internal structure would have to flip bullish as well. And just as our internal structure flipping bearish is a really nice signal that the pullback was starting, if the internal structure is to shift bullish, that is another really good indication, a nice confluence that our pullback is over. And what I'm just going to touch on now is a bit of substructure. As you can see here, I clearly say I do not trade substructure. I do not like to trade substructure at all. I do not think it is significant enough. And the reason it's not significant enough is because it's not breaking any strong areas, any strong structural areas. We have our internal structure within our swing structure. And what our substructure is, well, if I explain it in this way, if our internal structure is the structure within our swing structure, so we have our swing high up here and our swing low down here. Our internal structure is all the structure that forms within our swing points. So swing high, swing low, all of this is happening in between that. And our substructure is then, another layer below that. So our substructure is all the structure that forms in between our internal structure. So in this example, as price, begins to pull back, and I've obviously marked this in orange because this is going to be our substructure forming, we have our internal high and our internal low. And the reason this is going to be substructure, as I show you, is we'll have price make a move to the upside, it will retrace, and this is still, basic market structure. Technically, we have made a high and possibly a low. And as you can see, we do get a break of structure here. However, has this break of structure really broken any significant, structural points? Our internal high is up here, our internal low is down here. We've had a small retracement, price is retraced, and then, yes, technically made a break of structure or whatever you want to call it. But was this really a high point? Did this really, cause anything? Is this really a structural point we need to be looking at to look for breaks of structure? In my opinion, no. This is simply just a, substructure forming within our internal structure. And the reason I don't like to take substructure is because we have a break of structure here. If you're trying to trade substructure, you would be identifying some demand zones within here. However, the levels of demand you have in here are never going to be strong enough to give you a sufficient enough reaction to be able to make some really nice RR trades from. What you'll likely see is substructure form to build liquidity, and you'll have a lot of retail traders getting involved. They'll see the structure form, but they won't have a clear enough picture of, firstly, the swing structure that we're in, and also the internal structure. So they fail to see that this is really only substructure. And quite often what you'll see is, obviously, you'll have a lot of people looking to get involved here. And what you can see is price just smash straight through, and it will sweep that liquidity. And instead, our internal structure will continue. So everyone who was looking to get involved from here after this substructure break, will have been taken out completely. And, instead our internal structure has continued. We've still got our lower low. We've now got a new lower high after that internal breaker structure. And yeah, this is why I do not like to take substructure. Obviously, I've only included it here, but it could have been substructure within here, with any of these internal sort of swing points, internal highs and lows. There could be substructure forming, and it's not the type of structure that I want to be getting involved in. It's not significant enough for me. It's only very small moves. All the demand and supply zones that are formed from these moves are not going to be strong enough to sustain any really good sort of reactions where you're able to take those sort of nice RR trades. And you'll often find that your win rate is going to be very low if you are sort of taking these types of trades. So hopefully that makes sense about substructure. As I said before, if we've got our swing structure and our internal structure is all of that structure within the high point, obviously in this example, the high point up here and the low point here, and we have all of this internal structure forming. Our substructure is again a layer within that, if you like that analogy. And it is all the structure that forms within our, internal high and internal low. And for me, because it is that sort of third layer of structure, it's just not significant enough for me to be basing my sort of trade ideas around. And as I said, it can often be a way of building liquidity or inducement for true reactions. And this is what we may get down here. Obviously, we are now, really within our discount demand prices. And what we can expect is the pullback to finish at some point and our swing structure to continue. We've obviously got a bullish swing structure, but our internal is still bearish at the moment. So we are waiting for our internal structure to flip bullish, and this can be a really good sign that price is about to finish its pullback. And as you can see, we have now had that internal break of structure. Also, again, a change of character, just like the one we had here, because our internal bearish order flow is now broken. Our lower high has been broken. Price is about to form a higher high instead. And what we can expect after that is a sort of retracement back down. Only once we have that retracement do we have that higher high confirmed. And this is, again, probably, this is now, if I said this was one of my favorite setups where I'm taking sells from the pullback, this would be my favorite setup completely. And this is actually what I touched on slightly in the previous video, as I said, about my favorite SMC entry confirmation, is that I'm, really, really happy to get involved here as we have our swing structure. Prices come down into our discount demand zones. Our internal has now flipped bullish. So not only do we have that change of character, but our internal structure and swing structure are now aligned. So that's a really, really nice confluence that price is perhaps ready to finish this pullback. If price comes back down into these demand zones that cause that internal break of structure or change of character, I am, more than happy to look to get involved for longs here. And if I do look to get involved in longs, I will take some profits at my internal high, but most likely I will be targeting our swing high up here, as I am expecting this swing structure to continue. And I do want to be trading pro trend. And this is now a very pro trend trade because you are trading pro the swing structure and pro the internal structure. So it's a really high probability setup, these kind of trades especially. And this is why I say I really like to use internal structure as a, an idea of what the swing structure is doing. Up here, this internal structure gave us a sign that the pullback was starting, and now the internal structure is giving us a sign that the pullback is finished. Price is now pulled back down into our internal discount demand, and what we would likely see if the swing bullish structure is going to continue is a very strong reaction from here, and price will likely break this weak sort of M15 swing high. If this is an M15 example, obviously it doesn't have to be. You can use this on any time frame you want, but I'm typically trading on the M15 and then M1 for my confirmation entries. But yeah, if I'm looking to get involved in any M1 or even just a straight M15 risk entry on that demand, I will be looking to target that M15 swing high. And that is where you can then, ideally see that next internal break of structure. You've got that internal structure forming where you've got a higher high, higher low. Price is now pushed on. If we get that break of structure, we would then also have our new swing higher low, which will be the lowest point of our retracement, which is obviously this point down here. And we will then have our new range where wherever our high is up here, our new low will be down at this point. And this is when we will then likely see, this whole setup form again. And let's say if this move then becomes this move here, we look for the exact same thing. We look for the internal structure to flip bearish to give us a signal that the pullback may be starting. We can look to play the internal structure all the way down into our discount demand zones. And then once the internal structure flips bullish, that gives us a really good sign that the pullback is over, and we can then look for longs to continue that swing structure. Now, obviously, this is a bearish example. This is a bullish example. If you wanted a bearish example, it would obviously start with a strong bearish move to the downside. You would wait for the internal structure to flip bullish, which would be a signal that the pullback is starting. You're then more than able to play that internal bullish structure all the way up into premium supply prices, which would be, up here at the top. And then once that internal structure flips bearish and the swing and internal are now aligned as bearish structure, you can then look to place sells all the way down to that lower low, which would be in the bearish structure. So hopefully that makes sense to you guys. Hopefully I've gone into enough detail. As always, if you have any questions, be sure to drop them in the comments and I'll be more than happy to go through some extra stuff with anyone that needs it. And yeah, I'm just going to show you a live example now of how you can play this sort of internal structure within these swing structure moves. So guys, I've just pulled up a chart on EU, and I'm just going to run you through an example of how you can use swing structure and internal structure together to form some really nice trade ideas. And yeah, this is a trade I took at the start of this year. As you can see, I've rewinded price to around the 3rd of January, sometime in the morning. And this was a trade that I took live. Wasn't on my funded account as I'm still doing some testing on my SMC strategy. But yeah, this was a trade I took live on my demo account. And I thought it was a really good example of how you can use, internal structure and swing structure together to really have a good understanding of what the market is showing you in terms of price action. So as you can see from this example, I've just marked out some quick, market structure. We are on the M15 timeframe, as you can see, and hopefully, as you can see, price is in a bullish market. We do have some very messy price action here, but this was from the Christmas sort of New Year period. So it was expected, as volume is typically quite low during that period as everyone's sort of, on holiday, taking time off. And yeah, as you can see, coming into the new year, we have this bullish market. We have a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. However, if we look at price action and what it's telling us, we can see that every sort of breaker structure we have had, although it has, we have closed above every time, we have always, really closed with quite a large wick, and we've sort of retraced aggressively straight away. So as you can see, we break structure here again, we have a large wick, and we retrace aggressively again. We do come up here and we wick above, but we don't close above, so it's not a valid break of structure for me. And we pull back down into some nice demand, and we sort of come back up, but again, no real bullish momentum there, and we've sort of retraced straight away. Also, another important thing to point out is that when we had this sweep of liquidity here with this wick, price came down, mitigated the origin demand we had, and prices then, pushed up, given us that break of structure. But since then, price has come back down into this demand, which would now be our new origin demand, as our original sort of origin demand has been mitigated. So this wick here would be our next sort of origin demand. And this is pretty much the last point that price has to react to demand, give us that reaction to continue that bullish structure. So we would have been expecting price to continue that bullish structure, make a higher high at some point up here. But as you can see, price has pushed up. It's failed to do so. It's reacted from some sort of level of supply within here, and it has pushed lower. And we're now in a small little range here. But, I just thought I'd go over that because although we are in a bullish structure, and that's quite clear to see, we have our weak high up here, which we were expecting to be broken, and our strong low down here, which we're expecting to hold. Price is telling us that it may be ready to flip bullish, largely because of these corrective breaks we've had and this failed sort of reaction from this origin demand. So we'll just play price forward, and then I'll sort of take you through the setup that I was able to find, and how the swing structure and internal structure works really well together for this example. So as you can see, price is still ranging around slightly, and then we get a really strong impulsive break to the downside. And as you can see, we've not only broken this range we were in, so we've actually had a break of structure here, which I'll mark out now, and I'll change this to a M15 swing. So we've had a strong break of structure here. Our high, which would be this point, which was weak, would now be strong because our trend has flipped to a bearish trend. So this would now be a strong swing point. And this is the highest point of our swing, and wherever price begins to retrace from down here, if it's a significant enough retracement, obviously, would be our low point of the swing move. But really, really strong impulsive leg. And as you can see as well, we've actually broken away from this sort of ranging period that we had over that Christmas, Christmas and New Year break. So obviously, after a break of structure, we are expecting a pullback, and then we can start to mark out some of our market structure. So we just sort of let price play through. And as you can see, we're having a small pullback here. Price is pulling back, and then we actually, we don't close below the low there, but then we get a close of the low here. And, I'm looking at this pullback, and we'll measure it out. We'll see how large it is. So it's about, 26, 27 pips, so fairly significant. But in relation to the whole swing leg, is this a swing pullback here? It's a very, very small pullback, especially in terms of this entire, move. Our highs all the way up here. Do we want to consider this as a swing pullback? For me, I would be saying no, definitely not. This does not classify a swing pullback. We're nowhere near the EQ or, premium prices. I can even mark this out for you guys. So let's say we came all the way down here, and this would be our low, obviously. Our EQ would be our red line here. So we've come nowhere near the EQ, still well within discount prices. So for me, that wouldn't be a swing pullback, but I would be more than happy to mark it out as an internal, internal market structure forming, an internal pullback, and then an internal break of structure. And as you can see, I would mark it out like this. We had that low, we had that pullback to our high point there, and then we had a internal break of structure, which I would just put in now. And as you can see, we have that break of structure there. That would be my M15 internal. So our swing is bearish and our internal is also bearish. And we can look to continue playing this bearish structure, but we are anticipating that pullback. So it's a bit less high probability, than other setups we could be looking for. But, really good sign now that the pullback is starting is if we break this high, that will give us an internal break of structure, also a change of character. And, that could signal that the pullback is about to start and we can look to play that internal structure to play that swing pullback up into, premium prices where price may react from to continue that bearish order flow. So we will just continue playing price for the moment. As you can see, price is playing around a little bit, which is fine. We do come into our, supply levels here, so we could be looking to sell. But as I said, it's not very high probability because we are expecting that swing pullback. And as you can see, price actually breaks through here and it closes above. So we do get that internal break of structure right now. And this is where the internal structure has now flipped bullish. And this is a really, really good sign that the swing pullback is beginning. And I'm now happy to start looking for longs. Yes, it is counter trend to the swing bearish structure we have, but I'm more than happy to play this internal structure, into premium prices, playing into internal highs that form. And it's a really, really high probability sort of setup that I like to look for. So what I would then be looking for is what sort of demand zones can I expect price to come back into? And, the easiest demand zone to look at is obviously the origin. But as you can see, our origin candle would be this blue candle. If I mark it out here, as this is the lowest point of our entire leg. As you can see, price comes back out, it retests back into it. So if this candle has retested it, this should be the next candle we look at for mitigation. But as you can see, price has come up and has again retested this candle already. So the next candle we would be looking at is this candle here. And the main reason I like this candle the most is it's obviously been left unmitigated, but it is also a flip zone because if we mark out the supply that we had of our internal structure, which would arguably be this inside bar here, we can see that, if I just do this, we can see prices come into our internal supply. It has had that reaction, but it's a failed reaction. Prices come down, failed to break the low, failed to continue that internal bearish structure. And instead, we've got a flip candle here that has caused that bullish internal break of structure. So this is a really high probability zone for me to look for longs from. And if you want to get involved here, you can literally place your, order just above and have your stop loss just below. And you don't need to go down to any other time frames and look for any confirmation. And you can look for, targets up here into premium supply. But that's really up to you. What I would be doing is I would be waiting and, hopefully price will push on a bit more. We can wait for price to come back down. And this is where I then jump into, M1, M5 and look for some lower time frame confirmation entries. But we'll just play price through slightly because I know it pushes on a little bit further. As you can see, the internal continues. We get a really strong bullish break of structure and price begins to retrace now. And if I just go back one candle so you guys can see, I would obviously have my alert set here on M1, and I'm going to show you what type of entry you could take on the M1. Obviously, I said if you want to go on M15, you can put your entry just above, stop loss just below, and you can obviously take targets at this M15 internal high, which would be our high now because price has made this, significant retracement. We can class this as our high, and you can look for a nice target here. But as you can see, it's only 3R, which isn't bad at all. But usually I'm looking for much larger RR than that. So I would be going down to my M1. I would have my alert set and I'd be more than happy to look for my M1 entries. Now, as you can see, I've already actually marked this out, but I would be able to refine my M15 demand zone to my M1 demand. And I'm then happy to look for risk entries on this. And I'll just tell you why I've, marked out this zone here. And the reason is, we had a really nice M1, bearish structure coming in. We had a series of lower lows, lower highs, lower lows, lower highs, lower lows. Then what we can see price does, and I will just mark it out for you so you can see. So we take this final buy before the sell. You can see it's the final buy before the sell that caused that M1 break of structure. And as we can see, price, if we just hide this for a second, I'll delete that. We can see price comes down. We have that break of structure. We have our lower low and our lower high, and price comes up into our supply. We're expecting some sort of reaction to continue that bearish structure. But instead we get a reaction here with that wick and then an inside bar, which is what I really like, because an inside bar represents a range on a lower time frame. So obviously on the M1, on the 15-second time frame, this would be a nice little range in there. So we clearly have a reaction here, but that reaction fails, and we then get that change of character, M1 change of character, really strong reaction, and we also get a larger sort of M1 break of structure as well. So, for this trade, if I'm looking to refine my M15 zone to an M1 zone, it would be these two candles here, as this would be our failed reaction. So I would simply mark out that candle, and I'd be more than happy to, drag this along. And for this entry, I was, more than happy to do what we did on the M15, but we've just refined it further to this M1 candle, this M1 flip candle that's caused that change of character and break of structure. And I would simply, put my order above, stop loss just below, let's say a 4 pip for this example. If I can get a bit more specific, 4 pips there. And I would obviously be looking at that M15 internal high, and I'll show you that on the M15. I would be targeting this high because we are expecting this bullish internal order flow to continue, because we are anticipating that swing pullback after this, bearish break of structure. Obviously, we could aim, way up into here, but I'm more than happy to aim for this target. It's, 14.6R pretty much. So really, really nice target. No need to be greedy. If you want to look at supply levels, you obviously could, but we've got pretty clean candles. So the only supply level I can see here, these sort of sell to buy to sell wicks, sorry. I always get it the wrong way around. So I'd mark out these, but again, it's not the most significant zone. As you can see, prices just come down, had a very small reaction and pushed through. But if you wanted to, you could look up here as well for your second targets, which is what I actually did in this live trade. I closed 60% here, and my next targets were at this M15 supply, which was about 20R. But for the sake of this example, we'll keep it simple, 15.6R. We'll get rid of that supply level. We don't need that. We're just aiming for the internal high because we're expecting our internal structure to continue. So we've got our order set. That's all we need to do. I'm more than happy to take these risk entries. It's a really high probability zone because it's that flip zone that's caused the M1 change character and also a larger M1 break of structure. So at this point, we literally just let the trade play through, and we'll see what price does. You can see it comes down fairly correctively, comes into our zone very aggressively. So some people may be a bit worried about that, but I'm not too fussed about aggressive price entry. As long as it's not during news, I'm more than happy to stay involved. And as you can see, we actually get a pretty nice reaction. Price ranges around for a little bit. This is also because it's about 4 o'clock now, so not the most high volume sort of time to be trading, but I'm more than happy to take this sort of entry. And as you can see, price ranges around for a little bit. We get some decent reaction, and we sort of just let price play through at this point. And I would just jump back onto the M15, as there's no point for us to still be down on the M1 at this point, because our trade is based off the M15 timeframe. So we are now in our trade. We're expecting price to continue its internal bullish structure to facilitate that higher timeframe pullback. And this is where we just remain patient, let price do its thing. Obviously, we can see price comes back down near to our entry, but you've just got to remain patient, trust in your analysis, and just let the trade play out. So you got to just remain completely patient. No point, forcing any profit targets within here. If you've set yourself a target, stick with that target no matter what. You either have TP hit or stop loss hit. There's no other sort of possible option or outcome of the trade. And as you can see, we've been holding this since about 4 o'clock the previous day, and we're now coming into the morning, we're ranging over Asian session, which is expected. And I think we're just about to come into London Open, so about 7 in the morning, 8 in the morning. It's typically when London volume picks up. And as you can see, we come into London and we get that M15 internal break of structure. If I can get this, I'll just draw it out like this then. And as you can see, we get that M15 internal break of structure here. This is now confirmed as our low point, and we have literally got involved in the market in the best possible place we could have to catch this internal bullish structure, but also catch this pullback that we were expecting. And as you can see, if you did want to look at higher targets up here, you easily could have caught, a 20R trade very easily there. But, we were more than happy in this example to just have it at that 14.6R. And yeah, hopefully this is a really clear example of how you can use internal structure with swing structure to catch some really nice high probability trades, either anticipating pullbacks, which may be slightly less high probability than the other setups, or catching the end of a pullback. And I don't think this gives us a perfect example of it, but let's say this is our internal structure. This is what we'd want price to do: come up into some sort of supply levels, give us a change of character, pull back into that supply, and then we would expect that M15 swing structure to continue, and we would be able to get involved in shorts within this supply up here, stop loss just above or whatever. And this is obviously just an example, but this is how you would use it on the flip side of this example, catching the end of the pullback and continuing to play that swing structure. Right, I'll leave it there, guys.
So guys, that concludes today's video. Hopefully you guys have been able to find some value from what was shared within that video. If you have, please be sure to like, leave a comment and subscribe. And if you guys have any suggestions for future videos, I am all ears. So please, drop your suggestions down in the comments. I go through every single comment. I try and respond to every comment that's left on the videos. So if you guys have any topics or, any suggestions for any future videos, be sure to drop them in the comments and I'll be going through all of them. And I'm really just trying to make as many videos as possible at the moment to help you guys as much as possible. So if you guys let me know how I can do that, I'll be sure to do it. Cheers guys, have a good weekend.